I don't think I had a winning trade in 2 months. So things definitely changed.
And if anything that's in my C or D game, something happens, maybe I might decide not to trade it for a while.
Strategies fail, losses happen. In this Theta Live excerpt, Tammy Chambless, Dale Perryman, and Mark Anderson share how they spot when the edge is gone and how they handle big drawdowns.
What I do is just monitor how I'm doing based on compared to long term averages. And if all of a sudden my win rate started going way down or my gains started going way down, I would probably, I mean, as I one thing I do is I lose on trades is I'll reduce the number of contracts I'm trading, and so I'm kind of naturally starting to trade smaller. But I'll start evaluating what's going on, what's causing this, and if and I have stopped some strategies on zero DTE. I used to trade selling options. At the in the morning, right at the market open because of the higher volatility. But around 2022, that stopped working very well. I mean, there were a couple of months where I don't think I had a winning trade in 2 months. So things definitely changed. And so I just monitor it compared to backtest and historical data.
Kind of on that note, like how I would go about doing it is first off, you need to look at the test. So, like if you have multiple filters on it or you're excluding any types of days already, that's already a massive red flag. And the real question is, it probably never worked in the first place. So, there wasn't an edge and you're just made it up. Like the joke I like to say is if Option Omega had a filter for how many babies were born each day of the week, you could probably find some great alpha based on the amount of babies that are born on certain days of the week. But being more pragmatic, assuming you have a strategy like Tammy that's executing the same thing each and every day with the exact same mechanics, not filtering out anything, the first thing I would basically do is I would look at, okay, is it matching my back test so the assumptions are correct? Like Tammy talked earlier, was it slippage? What is forever? And then the next thing I would do is I would basically run like a 2-year walk forward analysis with 3 to 6 months out of sample. So basically what that looks like is, let's say you're like you are not including any data for the past 6 months because you would have tested it for a long period of time ahead of time. And basically you could do it every month or every 3 months. You move that 2-year period forward so that prior 6 months is always excluded. So like we need to give time for these things to work out, like sizing down. If you're size too large, you should always do that. But to actually have confidence that an edge or risk premium has degraded, we need to know the quality of what we're putting in first. Then we need to analyze it unbiasedly. That's not taking out any filters. That's then making sure our back test match based on our commission cost and assumptions of execution. And then that's basically walking forward the data set. And the idea of walking that forward and keeping that prior period out of sample is our emotions are not going to get in the way of that prior 6-month period. And also by doing that, there should probably be a consistent pattern of where we see the degradation of this performance coming down. And we're also able to see that through a period of time while bringing that time forward. So every time we walk it, we're now including what is known because we realize that the market can change and that risk premiums or edge can come in and out of favor over time.
I think for me, I tend to classify things into, is it my A game? Is it my B game? Is it my C game? Is it my D game? And along the way, if anything and I'm always paying attention to the percent of the contribution that they contribute to my overall return. And if anything that's in my C or D game, something happens, just hypothetically, the CBOE hits you in the nose or something, maybe I might decide not to trade it for a while.
So first of all, thank you all. I think you all are amazing for all that you do and continue to do for the trading community. You've helped so many people, all of you. I know you guys talked a little bit about mental mindset. I want a little bit more about that, how you deal with especially Dale, with the extremes of big wins and big losses.
I think there's an element in terms of mindset around optimism how do you pick yourself back up? I think when something bad happens to you, it's temporary, it's specific, and it's changeable. You can tell yourself certain things like, this too shall pass. It's always darkest before the dawn. Or one of the things I like to do every day is I write down three things. It's be smart, relax. Why? Because I find I make better decisions if I'm relaxed and I'm not all tensed up. And the third one is to be grateful. So no matter how small the win, as somebody told me one time, jelly's jelly, just put it on your toast. So I think there's certain books that I would highly recommend. One of them is not a trading book, but it's a book called Learned Optimism. It's kind of how you explain the causes of the good things and the bad things that can happen to you. And I think that can help any trader around personal resiliency.
How do I handle wins and losses is basically I try not to look at them as wins and losses. I look at them as, did I follow the rules or not? And I've back tested enough so that I know if I follow those rules, I will get a certain result after a certain number of trades. And that does involve some wins and some losses. So if I have a loss that day, it's just, it's a part of the probabilities of trading options.